early in the 2010s and formally launched our practice in 2018. A lot of my work focuses on compliance for all stages, whether that's a company that is considering launching a token or some other blockchain use case, and you're trying to figure out how do we do it without getting into trouble, all the way through we've already launched a token, and now that we have money, we now want to take some compliance efforts. What do we need to do? I've got a lot of hot takes about things that are coming up with the new administration and new legislation, but we want to be respectful of your time. We have a relatively small group here, and so we did want to take the opportunity early on to hear from you. If there are things that you and the audience have that are pressing issues for you from a legal compliance or from an insurance risk perspective, we'd love to tailor what we have to say to what your needs are. So if there's anybody who has a thought or a comment, yes, sir, you'll have to speak a little loudly.
KYC AML for layer 2s on Bitcoin, where things are pretty anonymous.
Okay. So just so everyone else could hear, his comment was KYC and AML on Bitcoin layer 2 where things are kind of anonymous. I'm happy to start this off. Okay, so when does KYC and AML matter? It's going to matter when you are doing certain activities. Like in general, if you're just, call it a retail consumer, and you're trying to use Lightning Network for everyday transactions, KYC and AML is not necessarily going to be important to you. Where it is going to get to be important is if you are interacting with banks, right? Because no bank is going to provide you an off-ramp without doing KYC and AML, and likewise, any off-ramp exchange, such as a Coinbase or a Gemini, is going to deal with you unless there's a KYC and AML compliance program. And so even if the layer 2 that you're dealing with doesn't require KYC and or AML, you're going to need to interact with that kind of a structure when you on-ramp or you off-ramp. And so there's only so much that can be done to avoid that interaction. The second thing I would flag is if you are raising money. If you are raising money, you are going to want to undertake some level of KYC and AML with people who are putting money in. And I run into this all the time where you have a startup that wants to raise money, but they want to raise money in digital assets, and they want to be able to accept digital assets from anonymous investors. Well, you're not going to be able to do that and be fully compliant. One, if you're raising private money, you may only be raising money from high net worth individuals, in which case they're going to need to show you how much they make. And two, even if it's not that, and you're able to raise money from non-accredited investors, you're still going to need some level of KYC to comply with, the anti-money laundering sanctions lists, OFAC, and all of those things. And so, for better or worse, as much as crypto is meant to be able to allow for anonymous online transactions, if you're going to interact with existing large financial institutional structures and regulatory structures, some level of that is necessary, but there are some interesting solutions out there where you can get third-party letters that will validate someone's status and validate that they're not on the OFAC list or that they do qualify as an accredited investor without necessarily compromising their anonymity. Whether or not that is satisfactory from a legal perspective, it's debatable, but it is an option that exists. Thoughts about that from the insurance perspective?
And on the insurance side, I think a big part of it is, as Alex was mentioning, depending on who you're engaging with on the insurance side and from a potential litigation standpoint, it's like, have you made your best effort? Have you made an effort? Have you acknowledged that this is an issue? And how can you demonstrate that you at least made an effort to check the boxes, right? So if that's obtaining the letters that, Alex is referring to your best efforts to demonstrate that you've done, as much as you could to adhere and be compliant.
That's a super great point because let's be clear, the law doesn't have a particular template that you need to use to conduct your KYC AML.
Yeah.
It's going to be, there's some flexibility, and to Claudia's point, you need to show that you have a program in place which is designed to reasonably make sure you're meeting those obligations, which is why this kind of like a third-party letter that protects the investor's anonymity but represents and warrants that they qualify, like, is that good enough? Well, you could say, look, we really need to be able to raise money pseudonymously. It's important for the cause of the organization. Maybe that's a risk you choose to bear if that's what's necessary to the organization. Otherwise, it's always easier. It's easy for us to give advice that you should just do more to comply, but in my experience, and I think in Claudia's as well, we're trying to figure out and working with digital assets clients, how can we facilitate doing what you want to do and kind of meet in the middle with existing regulatory structures.
Yeah. Yeah.
Other points of interest that people would like to hear us address, and we could certainly ad-lib on other things, but wanted to give you all the opportunity to weigh in if there's any hot issues you wanted to hear about. We have a mic if anybody wants it. Okay, well, we'll kick on with some other things, but if anyone thinks of anything, feel free to raise your hand. Claudia, I guess I'll set this up for you this way. Can you talk a bit about when you're talking to a new client, what are some of the most common issues that you run into and the types of clients you're working with when you're trying to source insurance?
Yeah, so at the end of the day, we like to say, you're running a business. You've got a phenomenal project and everything that you're doing that, you're building, that's great. But at the end of the day, fundamentally, you are still running a business, right? So when you're considering insurance, kind of the two main things that we're looking to help you protect are your assets, right? So company assets come in a variety of forms, hard assets, digital assets, locations, etc., relationships, reputation, and your people, right? Your employees, your clients, and your investors. Right, so how do we protect all of those stakeholders? First of all, kind of evaluating, how are you ultimately going to generate revenue? What's your your business plan look like, right? So what are the touch points over the life of your project? Some very basic things that, starting a business, you're going to look at workers' comp for your employees. And a lot of times there's a misunderstanding that if all your employees are remote or 1099s, that you guys don't need workers' comp for them. That's a fallacy. And in states like California and New York, they will find you and you'll get a nasty gram from the state that you're supposed to, if you're drawing payroll or paying 1099s in that state and there's no workers' comp, that can be a problem. Basic business insurance for your office, your equipment, that kind of thing. If you're fully remote, you can look at general liability only. I still think these are extremely important policies, even if they're small, just little startup policies. Because if you have an automobile accident while you're on a road show or going to a conference or something like that, you don't want that to be on your personal liability, right? Then as you start, courting investors, and a lot of times this is where I'll come in with some of the venture capital funds that I work with, we're kind of coming in to help you guys kind of package and get ready to go on the road. So some of the more substantial insurance coverages that you might be looking for are directors and officers coverage, right? So this is an insurance product that's going to back the indemnification, the corporate indemnification for the directors as fiduciaries of the company, right? You're responsible for hiring, compliance, all these different procedures, and claims that could name D's and O's directly. Then we want to look at things like cyber insurance, right? Technology errors and omissions insurance. And then depending on what your business is, are you custodying? Are you self-custodying? There are different insurance products for crime, right? Theft of digital assets. There's insurance products for the loss and destruction of the keys, right? So if you're with an exchange or you're with a custodian, having a thorough look at what representations are made to you as their client, what insurance they're extending to you, right? Then you get into the weeds with things like kidnap and ransom insurance, right? If you guys are, hot tickets on the market, we should probably set up some K&R insurance for you. For newer products that are coming out there is slashing insurance, right? So you can insure against a slashing penalty on specific networks. There is a new product coming out next couple of weeks that will cover mining business interruption. So there's really, the insurance market itself is slowly evolving to meet some of these different needs, but many times with the clients that I work with, I have a few markets I engage with, they can be manuscripted and bespoke to your specific needs. So you definitely want to engage with your broker, try and have underwriter calls directly with the market so you can explain what you guys are doing and what your specific needs are.
I want to pump up something Claudia said and then ask a follow-up question. The thing I want to pump up is the importance of D&O insurance, because I see this all the time. In my line of work, I'm often dealing with SEC investigations into a client's business operations or token holders that are threatening to sue the business for unregistered securities offerings and threatening to sue the directors and officers. It's very common in a lot of corporate governance paperwork to have the company indemnify their officers and directors for any liability risk associated with their service. But guess what? That indemnity is only as valuable as the solvency of the company. And so if there's something going on that is an existential threat to the company, if you're a director or officer of that company, guess what? That indemnity is not going to cover your liability exposure. And that's why I always say, if you are an investor looking to invest as a VC or a PE fund into a portfolio company that's doing crypto work, or if you're looking to start up a crypto business, having D&O insurance is something that you really strongly should consider looking into, because it is going, and Claudia is a great person to help with that, because it's going to help you cover what is frankly a significant risk in the industry, even with the new administration coming in. The question I had for Claudia, because I think it's of a lot of interest to people in this community, is do you have any hot takes on on-chain products in the insurance space?
Yeah, so I love this topic, and I know enough to be dangerous. That's what I like to say. But yeah, there are some insurance products on chain. There are a couple carriers, mutuals that have launched that I think, as in probably geared towards more of a retail risk exposure, very lower limit. But I do believe, blockchain just makes the case for insurance, right? You've got an incident, it's validated, you've got multiple people, entities validating this loss happened, here's where it happened, etc., and potentially programming for automatic payout. Fantastic application, exists already for flight cancellation insurance, flood insurance. I do believe, as you get, more involved with custody, crime, looking to grow coverages on chain like that as well. At the same time, I feel like some of the sticking points on that are the human element, right? There's still humans on the other side of these transactions. I've been through 15 years of claims with a variety of clients. Claims can be emotional. There can be change in personnel from when maybe a certain program was implemented to 5-10 years later when this incident or claim occurs. So yeah, I think it's something to keep an eye on.
I'd like to share with y'all a little bit of my crystal ball for what I see coming in the legal and regulatory space under the new administration. And then after that, I want to give another opportunity if anyone has any follow-up questions. Otherwise, we are certainly capable of continuing to talk. I think that let me talk about kind of at the federal level, 3 branches of government. You've got your executive. So we've gotten turnover on the executive. And I think that you're likely to see Gensler go. There's already been hints about his resignation. And you're likely to see a newer, more digital asset friendly SEC going into 2025. However, that does not mean it's open field, back to the Wild West bunch of ICOs like in the 2018 time period. I still think that it behooves everybody who's in the space to give a hard look to securities compliance. And by the way, for those of you, and I know a lot of people here are in the Bitcoin space, just because Bitcoin is a commodity does not mean that your Bitcoin company doesn't have securities exposure. For example, a lot of Bitcoin clients I talk with will sell a quote-unquote investment in their Bitcoin mining operation, which amounts to, call it a profit share of mined Bitcoin. It's essentially a kind of a cloud mining contract. In that form, where the purchaser of that contract is relying on the company to manage the assets and the infrastructure and things of that nature, there's still an argument to be had that that's a security. However, there are other ways of structuring that investment that may avoid securities regulation issues. So, kinder SEC, but it's not going away. The second on the legislature is, I think with a unified government, there's a significantly higher likelihood of getting pro-crypto legislation passed in the next couple years. And for those of you who tracked FIT 21 in the last legislative session, passed the House, didn't get to the Senate, and then the Senate bill didn't even get up for consideration, now we have a pretty good idea of what could be done with a unified government. And my strong advice for anybody who is trying to think about how do I approach compliance in a world in which we still lack regulatory clarity, you've got a template in Fit 21, and you're highly likely to see new proposed legislation coming up where you can start to take steps now to think about what disclosures are you going to need to make, what compliance measures are you going to need to take in order to be in the best position to take advantage of new regulatory safe harbors that will protect you down the road for things that are coming. And to bring it back to insurance, one interesting thing I learned from Claudia, because I was trying to think about this issue of if I know I'm operating in a regulatory gray zone and I don't know what my exposure is going to be, how can I get insurance on that? And I want to let Claudia speak to this in a moment, but I was surprised to learn that you don't necessarily need to show a robust compliance program. You just need to show that you have executives on the team and directors on the team who know what they're doing and have the wherewithal to structure that. Let me turn it over to Claudia if you want to speak to that.
Yeah, sure. So again, it goes back to the topic of your best effort, right? Acknowledging, the current environment that you're operating in today, the current expectations, and doing your best to, fulfill those requirements. From a startup standpoint, depending if you are kind of pre-seed and you haven't yet been working with an institutional investor, you're really also trying to, potentially partner with, somebody like Alex's firm on an outsourced type of basis for, specific project work, right? A lot of the startups that I work with, it's two guys and a laptop, I say, right? But definitely scalable for growth. So how can you surround yourselves, while you're still operating lean, with the right support you need in order to get kind of up and running? And that's from an underwriting standpoint, whether you're talking about the insurance market or underwriting from a deal, right? They just want to look and you guys to recognize, where do you need help? What have you kind of brought in from a resource side? Whether it's, again, outsourced COO, CCO, GC, a lot of these service providers are there and, are available to help. The other thing I would say is if you have taken, some private equity or venture capital funding, is to rely on those deal teams. A lot of the clients I work with, there might be a handoff after the transaction happens, but a lot of there'll be like a portco shepherd, so to speak, somebody internally at the GP that can help the portfolios, with these different needs as they grow and go through the different fundraising cycles.
Let me pause here. If anybody has any questions or things they'd like us to address, we still have another 10 minutes or so. Okay.
We can talk about M&A too.
Yeah, M&A will be next.
I was ready to yell. A question that I'm trying to figure out right now is what states are most, are the friendliest for a trust charter for, crypto companies in particular?
Great question. This is one of my favorite questions to answer. So there are several states that are well known for being more crypto friendly, Wyoming being the most obvious. Texas, let's shout out for Texas. Texas is making some progress. I think you've seen some legislation in Florida, and there's a few other states that come to mind. We have a whole, if anyone's really interested in this, feel free to follow up with me because we've done some diligence on this, but let me quickly kind of take some wind back out of that sail, because state protection or state-friendly laws are not going to protect you from the federal laws. And so all the state safe harbors in the world cannot protect you from having to comply with federal securities and banking laws and things of that nature. Now, some things, banking is interesting because we talked earlier about custody. Custody is often going to be kind of a state law issue for what's called money transmitter businesses. And money transmitter laws, there are some at the federal level, but what qualifies as a money transmitter is often determined state by state. And so the more refined answer to your question, to give a lawyer's favorite answer to any question, is it depends on the business that you're doing. If you would be a custodian and might qualify as a money transmitter, it's going to be important for you to look at the states where you're going to be operating, because it's not just where you're going to be chartered, but where you're actually going to be conducting business that's going to matter. And there's been a lot of legal development in this area, particularly around Bitcoin ATMs, where they are meeting those definitions of money lender. And so they've had to go state by state and figure out where can we get favorable treatment, where can we operate and do things of that nature. Is there a state perspective on insurance?
It's more about the federal.
Yeah, fair enough. Fair enough.
I I lose less sleep over a state investigation than a federal investigation that a client's going through.
Other topics, or we'll go to M&A because that's a hot area. Yes. Oh, tornado cash.
No cash, Roman storm.
I didn't hear the rest of it, but let's wax poetic on tornado cash a bit. I don't know. Is everyone here? Well, I guess let me just give the brief recap. So, Tornado Cash is a software protocol that enables mixing. So, if I want to send digital assets from me to Claudia, but I want to obscure the paper trail of that transaction, I could use Tornado Cash to make it harder to detect that I sent a certain sum of digital assets to Claudia. As many in the audience know, that system is never perfect because the ability to trace blockchain transactions now from people like Chainalysis is very sophisticated, and I question whether or not it's even viable absent certain technologies like Monero. But what happened from a legal perspective with Tornado Cash is so interesting because it got added to the OFAC sanctions list kind of as a quote-unquote person. And it raised this super interesting legal question of, can a smart contract have legal agency as a person? Because if it can, that has wide-ranging legal ramifications for what does legal personhood mean and things of that nature, a lot of which is still being litigated. But in short, the affirmed decision to put Tornado Cash on the sanctions list reflects a very hawkish view of the government that essentially privacy is the privacy to commit crime. If you are trying to obscure a financial transaction, it must be because you're doing something bad. And it kind of ignores what I've always seen as the intrinsic value of privacy for the sake of privacy, which I think is something a lot of us in the digital asset space very much honor. And it sends a bad signal, I think, when you have what I would call a use-neutral technology that could be used to facilitate crime, but could also be used to facilitate totally legal and valid transactions like, I want to give money to an organization, but I don't want people to be able to find out that I gave money to that organization. It's kind of a free speech issue, which you would think would be important in the United States. I don't know that I would expect that decision to change, and I think that from a legal perspective, mixers in general, and Tornado Cash in particular, it's a badge of doing something shady. Like, if it comes to light in an investigation or in litigation that a mixer was used, it's going to be seen with a lot of skepticism. And I think that if you are interested in trying to enhance privacy for your transactions, there are better ways to do it than mixing from both a technical and legal perspective, and I'd be happy to discuss those. Claudia, your take on mixers and that side of things.
Yeah, I think anything that smells a little off can be off-putting to an underwriter, right? So, I mean, that's depends on. I run into this a little bit with privacy tokens.
Yes.
Right. So
I was curious about your take on that.
Yeah. So, you know, I've a spectrum of clients, right? That some are wallet providers, some are custodians, some I layer one blockchain clients. So, in specifics, you know, this comes up with like custody and crime coverage, right? When we're defining what is actually covered, and a lot of times they want to carve out coverage for a privacy token, right? So anything that's going to kind of be a little off, where anonymity is involved, it sometimes can be problematic. And I'm not saying there'll be an exclusion, but it's something that you just definitely have to be mindful of.
I think this is such an interesting topic, and it's actually something I've worked on a lot, which is how can you build kind of a privacy maximizing platform and do so in a way that is, you know, legally compliant and that allows you to mitigate your risk through insurance. And I think that going back all the way to the AML KYC discussion, you got to kind of figure out what your critical points are because, you know, having worked on this a lot, I can tell you that maximizing privacy is possible, but comes with a lot of trade-offs in what you have access to. For example, institutional banking, and to a certain extent insurance. But it's all a spectrum. If you know that you want to be invested in maximizing privacy, you have to ask yourself at what cost, and what cost are you willing to pay in order to maximize those privacy, that privacy value for your customers. And I think there's absolutely a use case there. I just think that it's a lot more challenging than people may expect it to be. Other questions or thoughts as we wrap up? While we have a little time, Claudia, what's on your mind on M&A?
So many things on M&A. Everybody so excited. Seems like everybody's talking about M&A, and I definitely feel like we're going to see a lot of money free up right in the next 18 months for a lot of deals. I think there's a lot of pent up energy. That's all exciting, but at the end of the day, I come in as Debbie Downer and I talk about insurance. And what I want to say to buyers and sellers is, if you're selling your company, you're going to be rolled up into your buyer's coverage, right? So if you are a director or officer, right, and there's post-transaction litigation, there's stuff that you just have to be mindful of. One is if you did have a D&O policy in place, making sure it's put into runoff, which is basically allowing a window of up to 6 years to remain open on your policy for claims to come in that occurred before the transaction, right? And then post-transaction, what are the limits and coverages that you're going to be afforded under the acquirer's policies, right? So there's really a lot to be thought out, and try and engage in that process early when you are having negotiations, because the number of calls I get where it's a Monday and a deal's supposed to call on Friday and everybody's scrambling, it doesn't put you in a good seat, and sometimes insurers can get the upper hand, and that's not in anybody's favor there on that side. So.
And I'll say from a legal perspective, let's welcome back to M&A season, baby. Reps and warranties are so critically important for both the buyer and the seller to make sure you've got good disclosures, good understanding, and then good risk apportionment, because, typically when people come and talk to me, it's because something has gone wrong, and I see so much post-merger litigation where the buyer feels like they were hoodwinked about what they were buying, or the seller is subject to some earn-out where they feel like they met all the hurdles and then they didn't get paid the rest of the earn-out. Because anytime you're talking about big money M&A, you're going to have opportunities for tension and conflict. Always better solved at the front end if possible, but if not, that's why I have a job. Yep. With that, so we are almost out of time. We will stick around if anyone wants to talk or have any discussions. Our information is not up on the Summit website, but our names are right there. We're both on LinkedIn, and we're both relatively easy to find on the internet. I hope this has been helpful, and again, we'll stick around for any post-session Q&A that you may have, but otherwise, thank you all so much for coming.
Thank you.